Hey everyone, this is Mike Kramer of Ma Capital. Today is Tuesday, September 10th. It's around 6:30 New York time. So tomorrow we'll be getting the CPI report. We're expecting that number to come in at 0.2%, in line with last month's reading. Core, we're looking for 0.2%, also in line with last month's reading. CPI year over year, 2.5% down from 2.9. Core CPI, we're looking for 3.2% year over year, in line with last month's expectations. It's worth pointing out very quickly that CPI swaps right now are pricing and expecting a number tomorrow for the year over year at 2.5%, but they're also expecting a number of 0.1%. So there is risk that this number does come in below expectations tomorrow, and that based off of CPI swapping, and that will be something to potentially look for. Then on the 12th, we'll be getting PPI final demand. 0.1% in line with last month. PPI ex food and energy up 0.2. That's up from last month of 0.0. Food, energy, and trade 0.2 down from 0.3. Year over year, we're looking for 1.7 down from 2.2. Ex food and energy 2.4 down from 2, in line with last month's reading. Also on the 12th, we're going to get initial jobless claims 227,000 in line with last month. Continuing claims 1.85 million versus last month's 1.84 million. Then on Friday, we're going to be getting import-export prices, and then of course University of Michigan. Next week, we'll be looking for retail sales, and certainly the results tomorrow are going to have a really big say in terms of what happens with currencies like the Japanese yen. That's been trading around this 142 mark. Then there's some more support around 140, and then after that, we're looking at the next major level of support at 137. So there's certainly a lot of room here for the yen to continue to strengthen versus the dollar. And we're really seeing that yen strengthening across the euro as well. You can see the euro JPY has also been moving down, and we can see that we're nearing this area where we're going to probably start looking for support around the 155.20 area. We've certainly seen the euro strengthen versus the dollar more recently. Again, we're kind of just at this point now where markets are trying to figure out exactly which way central bank policies are going to be going. And if we start seeing things like inflation really come down faster than expected, if the Fed were to begin to expect maybe further rate cuts being priced in, that could ultimately lead to the euro moving up. So at this point, again, we're kind of watching to see how this data comes in tomorrow, because if it should come in slightly weaker, that could really result in the euro reversing some of these recent, some of the recent weakening versus the dollar. Likewise, if the number were to come in as expected, you probably could see the euro break down to this 109.5 area. And again, at the same time, it's the same thing with the pound. We've been seeing the pound strengthening versus the dollar. Last week, we had talked about the potential for the pound to maybe break out of a bull flag. And it's certainly still the case that we could see the pound break out. It certainly looks still like there's a potential bull flag here. And so we'll just have to keep an eye on this, because again, if we can break this downtrend here around 131, it could certainly lead to a revisit up to this 132 area. And if we were to see a weaker than expected CPI report tomorrow, that could certainly play a heavy role. Otherwise, we're looking for support around this 129 region. Oil prices were obviously very weak today. We talked last week about oil potentially breaking lower, coming down and testing this area of support at 67.50. Again, this is sort of a really big area of support. And right now, we're looking at whether or not oil can hold this area, because this area goes back now a really long way to around 2018 at $65. So a break of $65 would be a really big negative shock and would potentially set up a drop to in the maybe the upper 50s and maybe back even to the low 40s at this point. So right now, oil is in a very vulnerable state. It looks like currently gold is in a position to potentially move higher from here. We can see it almost looks as if there's a bull flag in place, and currently that would suggest maybe we can rise to around this 25.50 region. That would certainly be a possibility at this point in time. When we swing over to the DAX, the DAX did break down through support yesterday, and you can see that we've been trending lower. Again, this is an area that has offered support over the last couple of months. Right now, we're waiting to see what happens next. It could mean that we're looking for the DAX to continue to decline. That looks like we have a gap to fill at around this 17,900 region, and that would certainly be an area that we'd be looking for if we were to see the DAX gap below this 18,180 area. Otherwise, we're looking for a potential return to around 18,700. We were talking last week about the potential for the FTSE to continue to move lower. It's continued to move lower a little bit. It looks like it's trying to consolidate. This is obviously a very big area of resistance at this point, and we're looking at a major level of support around 8,190. If we were to break that level of support, it could certainly see us drop down to around 8,060 or so. Again, right now we're sort of just waiting to see what's going to happen with all of this data that comes, because again, it appears the market is positioning in such a way that we could really see the dollar begin to weaken versus the yen, versus the euro, versus the pound. And we're also at a point where it looks like gold wants to go higher in what looks like a risk off signal, because it's also coming at the same time that we're seeing oil breaking down in price. And so that would sort of ring through it and say, hey, this looks like risk off. This looks like something that could be a negative for equity markets. When we look at the NASDAQ has been able to rebound the last couple of days, but it's also come right back to support at this 18,825 area. Certainly, we would need to see a break out tomorrow and rise up and above probably this area here at 19,100 to see if there's actually any meaningful form of if there's any sort of meaningful follow through. But otherwise, we're looking at the potential for the NASDAQ to probably fall back to around 18,040 over the next several days. When we look at the S&P, very similar. 5,500 is really a very big level of resistance. This is an area that basically is a level where it's concentrated with gamma, and that's also kind of keeping a lid on the S&P 500. The next major level from an option standpoint comes around that 5,550 area. So we're looking at a situation where if we can gap above 5,500, it could certainly lead to the index building and potentially getting up to around 5,550 to 5,560. Meanwhile, we have this gap to fill down at 5,400. And again, if we're in a risk-off mode, if we were to get a CPI report that comes in as swaps or sort of pricing, that could lead to all these other things falling into place, and we could be looking at an S&P that undercuts this low of 5,400. Again, we need to be careful because implied volatility levels going into this CPI report are elevated, and typically when implied volatilities get elevated following the news, we know that implied volatility comes down sharply, and once it comes down sharply, that can give the markets an initial knee-jerk reaction higher. So we need to be careful because that's what happened on Friday following the job report. So we need to be careful and keep in mind that there's some mechanical stuff going on in the background as we go through the rest of this week and next. Also, the Dow, big level right here, 40,870. That's the big level of resistance. Clear that level. Probably have a chance to take on the highs. Fail at that level, I think we're going to see the Dow revisit 40,063. Anyway, that's all I have for you today. Hope you found this helpful. Until next time, have a great week. Bye.